Hi and welcome to Pleasant Trading. My name is Robinson. Today we will be looking at the 200 SMA, the 200 Simple Moving Average. Uh, the 200 SMA can be used in a lot of ways. It's used to tell you how strong a trend is when it comes into the 200, if it pulls back, if it breaks above it. The 200 can tell you a lot of things, but for the purposes of this video today, we want to talk about how to trade when the candles get around the 200, when they've broken above it, broken below it, and what that can mean for your potential trade. So the very first symbol that we want to go to here is CCL. CCL is Carnival Corp. I don't know if you guys have been watching the news lately, but they've had a cruise ship that got stranded for whatever reason. And during that time, it's caused the stock to fall drastically. And this is how it is sometimes. If you hear something on the news and you're new to trading and you don't really know what symbols you like and don't like, and you just hear something on the news, you can kind of go pull up the symbol, look at the company, and see if you like the stock, what price it's trading at, the volatility, volume, whatever you're using, whatever metrics you use to determine if you're going to take a trade. But today we're going to be teaching on the 200 moving average. And it's a simple moving average, and it's this big long green line that's on my daily chart here. So this would be a daily chart of CCL, and we're looking at the 200 moving average. So if we look at this 200 moving average here at the most recent part of the chart, we can see that the market made a new high, gap down, pulled back a good amount here, and then for one reason or another it died. The reasons that it fell are not as important as the pattern that it presents after it falls, right? Because you get this big red candle here that breaks the 200. Can you see that? It breaks the 200 right here at 35.81, 35.77 or 81, whichever one you prefer, 78. So after it breaks this 200 here, normally this is where I like to short. I take a nice short position right here after the break of the 200 with a stop slightly above the 200. So if you shorted it at 35.81, maybe your stop is at right above this red candle here at 36.33. And you're looking for a break below $35. Obviously, if you're in from 35.81, the market next day it opens below the 200. It stays below the 200 that entire day. Maybe it pulled back a good amount that day. The next day presents a red candle, completely erases the green candle in front of it, stays under the 200. This is the type of trade that maybe you should hold on to for maybe 2 or 3 days, considering the time frame that we're looking at on a daily chart. Now, when you're trading the 200 SMA, it doesn't always have to be on the daily chart to hold on to it for a very long time. You could see it break the 200 SMA on a 15-minute time frame and go the rest of the day. But if it's on a 15-minute, that means the trade might last that day. If it's on a daily chart, that means the trade can last for 2 or 3 days, or 4 or 5 days, or just completely turn around from there. If you look at the 200 SMA back here, when it broke on CCL, it just never came back. And this was, 7/26/2012, July 26, 2012. After it broke here, it just kind of never came back. So that's something to pay attention to whenever you're looking at the 200 SMA. It can tell you many things as you're trading throughout the day, believe me. Another good trade, pattern trade, is on RAX. This is Rack Space Hosting. This is also here on a daily chart. Right, so we look back to the most recent part of the chart. We see we get a break of the 200 here, right here at 60.44. Maybe you want to have a stop right at 60. Maybe you want to enter short here at 60.39, 60.14. Anything above 60 as a short is a great price to be in, because after it breaks the 200 here, it stays below 60. You see that for 1, 2, 3, 4. 4 days, a full 4 days, and maybe a half of a fifth day or something here. But either way, this is a great break under the 200. As long as it's breaking 60 and it's staying below your 200, it's always a great trade to look for. And these are easy trades to pick up, whether you find them on the 15-minute, the 5-minute, the daily chart. Like I said, if it breaks the 200 with any real momentum and then pulls back and stays below your 200, it's a great trade to have. it's a great trade to have. I have stuff popping up everywhere. I'm not sure why yet, but here we go. Yeah. So anyway, as these things break, they can hold on for a good amount of days. And if you're trading this on 1,000 shares, if you're short here at 60, 60 35, whatever, if you're short, down here at 54.59, that's a good $6 run, you know, or at least a $5.40 run or whatever. And on 1,000 shares, that's a good amount of money. That's 5,000. That's $5,400. It's not a bad move for just 2 or 3 days of holding on to a trade that you've seen break the 200. Because these are simple pattern, entry and exits that you might want to take. Now, seeing this long bottoming tail is an obvious sign of a pullback, right? So if you see this long bottoming tail here, maybe you wouldn't want to stay short, because the next 2 or 3 days it could try to come back up and retest this 200. It just depends. If we open up on Monday, today's Sunday night, I'm in Boston. If we open up on Monday in the stock market and we open up with any real momentum and it gets above 55 and stays above 55 and starts to eat into 56 and 57, it's time to exit the trade, because you're in from 60. You can't let it go a dollar or two, in a pullback and not actually move your stops down or take half profit. Or me personally, I would just exit the whole trade, because this is normally where I get out at. Seeing that kind of a pattern there. So there's a lot of this happens quite often, believe it or not, where you'll see a break of the 200 or a hold of the 200. And, the first two examples was of Carnival and REX, CCL and REX. This next example, let's look at CRI, Carter Holdings. If you look at Carter Holdings here, we kind of had this sideways pattern that we did right here, right? And then we had all these tops that happened. We had one top here, another top there, another top here, and then another top here, and then another top here. Right? So it didn't look like it wanted to go any higher, but at some point it started to fall down and come into this 200. This is when the trade becomes important. This is when I start to care about it a lot more. And on my scanners, I'll look for things that are right at the 200 on the daily chart, breaking above it, right into it, just period, around that 200, because I know if I can find a trade around the 200 breaking above it or breaking below it, that's a possible trade for 2 or 3 days, if you're planning on swing trading something or holding on to it a lot longer. Normally for me, if I see it holding on the 200, it means intraday it may be very strong, that it's going to hold that entire day. Right? So we get a lot of congestion here. It wasn't ready the first time we looked at it. And then we kind of go up a little bit, pull back into the 200 again. It holds. You have this complete red candle here. And then you get another green candle that completely erases this red candle in front of it. We go back up again, and then back down again into the 200. And then finally we get this long bottoming tail here that sends us a lot higher. So you may have to wait sometimes, right? Maybe if you seen it here and pull back into the 200, and then you've seen this, bottoming tail happen, you didn't take it that day. The next day you said, forget it, I'm going to go long. You probably took the trade here. And then as it got here and got extended, and you seen it was doing all of these small green candles. I don't like to hold on to a trend. If the trend is supposed to break out or start an uptrend, or if after I get in, it should produce bigger green candles. And when it doesn't, I get suspicious, because I start to wonder, is there any real buying power on the end of this trade? So, just kind of something to look at. You always want to look at the size of the candles that you're trading. So this is an example of when the 200 actually held and sent the stock higher.